Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 29th, and we just got two economic news releases scheduled for today, but they are important ones. The first one is the Case-Shiller Home Price Index for the month of November. We had in October a year-over-year climb of 4.2%. And then for the month of November, it was actually 5.5%. So a nice growth showing on the home price index. So people obviously going to like to see, if they own homes, obviously to see appreciation in their homes versus the decline we've been seeing for the last couple of years. So showing some recovery actually in the housing market. But obviously be a little cautious as we most likely are going to be seeing a little bit of a little bubble, not like what we've seen before, but probably a little bubble. Primarily because if you look at the Fed artificially keeping rates low, also the banks, a lot of banks are holding foreclosures and such, holding inventory. So there's a lack of inventory. So if you're a home buyer, you're out there, you're seeing a lot of this, and that's going to be the number one complaint, that there's not enough homes out there. So which is driving prices up further because they're limiting the supply and increasing the demand. So which is rising. So we'll have probably a little bit of one, but well, I don't think it'll be as big as the last one we saw. So just be a little cautious on that. But in the interim, we're seeing a little bit of home prices there. Consumer confidence for the month of January, we had earlier reporting of 66.7. Remember, we get one come out earlier in the month, and then we have a final one. And they thought it'll come down a little bit for the final reading for the month of January, and it came down quite a bit. So people are feeling a lot worse than they were thinking. And when we're in a good economy, the reading is actually 80 plus. So anything above 80 is when we see a good economy, and we're far from that rate at this moment. So it's consumer confidence is very important, because if people aren't feeling too well and they're not out spending money and get the economy moving, we do end up in another recession. So it's very likely, if we don't see consumer confidence go back upwards, we could end up in another recession. So be cautious there. So we're going to jump over to the fundamentals here. We got the stock market's a little mixed, kind of like yesterday. Dow was up a little bit, so it was up around 57 the last time I looked this morning. And then also a biggie would be the Fed opens their two-day meeting. So tomorrow afternoon, usually around 11 o'clock Pacific Standard Time, they'll have their announcements, and then Bernanke gives his meeting. So this is going to be important, because remember, earlier this month we had the notes came out, and the investors got very jittery and had a big emotional day on the bond market, where it started tanking, primarily because there's several members on that board that were up for very hawkish. What I mean by hawkish is that they basically want to see the mortgage-backed securities stop the purchases this year, sooner the better. And a lot of people were under the impression that they're going to continue buying it until like mid 2015. And that was because that was kind of the previous statements that they weren't going to change any rates. So by keeping the rates, they just assumed that the Fed was going to keep buying until they start raising the rates. And because they changed it from a the date standpoint of like mid 2015, now they kind of pinpoint against an index like the inflation as well as the unemployment rate. So those are two gauges that are going to be even more important going forward as to where interest rates go. All right, so let's go ahead and take a look here at the bond market, see what's going on over there. We showed some improvement. We did close that gap we had yesterday as we start off the day way down here. We do have another gap to close right here. But right now for the day, we are at a low, down a little bit. Not a huge difference. So we're pretty much about even in terms of interest rates, because you're talking about 9 basis points here. And anything that will affect rates is really about 12 basis points or greater. So it could increase rates later on if it continues going downwards, or we could improve again. So, but it looks like we've kind of hit maybe the bottom here. We could see some improvement in the near future. I would suspect we could see near improvement from there. All right, folks, thanks for stopping by. The rates are about where we left off yesterday afternoon, not in the morning, because we did have an improvement in the morning yesterday, but rates are about where we left off yesterday, at yesterday's close. Thanks for stopping by. Thanks for watching. I'll see you guys tomorrow, and if you guys feel like it, stop by Mike's Daily MarketReport.com. We do have a subscription on there, so if you'd like to just sign up, we don't share your information, nor do we send you any other emails other than when we upload the videos that you'll get the video sent to you. Have a wonderful day.